The main objective of the webinar today is to look at the relief measures as indicated by the Minister under the draft Disaster Management Relief Bill announced on the 29th of March 2020, which went into effect on the 1st of April onwards. We will also highlight a few changes that were announced, I think, on the 23rd, which was last week, which was the second wave, as indicated by Minister Tito Mbeweni regarding the first implementations that happened from the 1st of April. So I'm going to first start taking you through our slides. We're going to look at the presenter. I'm Jeffrey Chiteleka. No, got my surname wrong there. Jeffrey Chiteleka, General Tax Practitioner and Business Accountant. I'm fortunate to have much knowledge in the tax industry and accounting field. I've worked in the FMCG sector for quite some time. I've been with Enterprseroom for the past 2 years. And I've done my bachelor's in accounting science. I've registered with SITE and Cyber, and duly authorized to give professional tax advice and accounting services. I have my colleague Neil, who's also will be by my side to also assist me in any questions that anyone might have regarding the presentation that's just about to happen. We're just going to have a brief look into the organization, Enterprseroom. A brief history on who we are and what we offer. Enterprseroom is a specialist consultancy that assists our client to develop and implement high-impact sustainable enterprise and supplier development. Our main aim and passion is transformation through entrepreneurship, and then we believe that inclusive and enduring economic growth in SA requires a number of success in SMMEs to increase sustainability. We've launched, since our inception in 2008, we have delivered strategies and programs across a wide range of industries. And our core offerings include enterprise and supplier development strategy and advisory, program management, SME development and support services, BE consulting, BE compliance for small businesses, economic inclusion program, procurement analysis, skills development analysis and strategy, policy review and advisory on entrepreneurship and job creation. Our reach has to this date, as you can see across the different provinces indicated on the chart there. We are situated in Johannesburg, Jan Smuts Avenue, and then we do deliver this project all across the country. As you can see, our impact is 484 SME in ESD programs, and then we have over 2,000 SMEs trained, created over 1,000 jobs. We have been involved in loans and grants and managed and facilitated all those funds, close to 100 million of that. We've tracked all the spend on the BE scorecards, over 100 million of that. Jumping right into our COVID-19 self-relief measures, I'm going to present this webinar with the assumption that most of our SMMEs who happen to be business owners came into the field with their knowledge on the particular area of business that they have, assuming that none of you are accountants and tax practitioners. I'll keep the presentation very simple and assume that most of the terms that we are going to discuss, you guys are not familiar with. So I'll try to also explain what each and every measure of that or tax entails, and then look at the available relief thereafter. Our presentation will focus on the following. We've got four focuses for today. First one being VAT. We're going to look at what reliefs are available on essential goods and services and non-essential goods. Under payroll, strict emphasis will be on pay as you earn, ETI, and the TERS. I'll explain each and every one of those further when we look at each and every one individually. Provisional tax. The first relief available for the first provisional tax and second provisional tax. And lastly, this webinar has been prepared from information from all sources from the SARS website and compiled in the simplest of manner to make it easier for the SMME to understand. So I have to reiterate that again, this information is obtained as it becomes available and as it is from the related website as indicated on the SARS website and other fiscal websites. Our first relief, we are going to look at that. While I'm still presenting, if there's anyone who doesn't understand, I'll just repeat. Feel free to unmute yourself and ask any question. Feel free to ask me to repeat anything that you did not understand. So the value-added tax, there'll only be exemption on essential goods that are being imported. This essential good is only applicable to enterprises who import essential goods, and they do not have to pay VAT with regards to that. But unfortunately for all our local sales, there'll be normal VAT as per the VAT terms. So when you submit your monthly or bi-monthly VAT, unfortunately there is no relief for the majority of us. We have to pay our VAT in time to avoid any penalties. After this was prepared, the second wave, which was announced by our finance minister, we were informed that there will be fast tracking of VAT refunds. So which means that smaller businesses who are expecting a VAT refund will be refunded very, very quick. And then for those whose tax periods are bi-monthly, who wish to claim refunds every month, SARS is still busy working on fixing the website so that when you do submit your VAT 201, you'll be able to recall it every month, rather than waiting for your bi-monthly submission. So just to summarize on this, for import goods, essential goods, you will pay no VAT. For your normal sales locally, there's output tax that you charge that has to be payable to SARS. There is no relief on VAT as per the moment. Next slide. Provisional tax. Provisional tax is a prepayment of tax for the tax year based on an estimate of the taxable income. So that means, for example, in the calendar year, you'll have 2 periods to pay tax before the end of your financial year. If, for example, for the first 6 months, you anticipate that after the end of your financial year, by end of Feb 2021, you are going to make a taxable profit of, say, 100,000 rand, say 200 or 500,000 rand, you will be able to, you submit these taxes. They are compulsory. You have to submit them twice a year, one being on the 31st of August and the next being on by the 28th of September. So the available relief for provisional tax is that when submitting your first provisional tax by the end of August, you are able to only pay 15% of the estimated total tax liability. The second provisional tax payment will only be based on 65% of the estimated tax liabilities, which gives you a deferral of 20% in total. However, when you do submit your final tax, which you've got at least 1 full year to submit your final income tax after your business has been audited, you'll need to pay the full amount. The difference between what you have declared and what is the actual tax that is calculated per your financial statements. Moving to the payroll, we are going to focus on 3 key areas, which is your pay as you earn. That's not normal employee tax deducted from your salary. There is a scale on how that is deducted. We're going to look at your ETI, which is your employment tax incentives, and we will look at your TERS, which is a temporary employee relief scheme. What do we mean by ETI? In short, ETI is an incentive aimed at encouraging employers to hire young individuals, less experienced workers. So in short, this reduces the burden on the employer, the cost of hiring that particular employee. It's a subsidy that is offered to the employer for hiring young employees. So as long as you hire them and their general criteria, they fall below the income bracket of less than 6.5, 6,500 per month, you will get that incentive. The temporary employee relief scheme is something that is separate from the UIF, and then the directives now make it clear that should an employer close all or part of its operations as a result of COVID-19 pandemic for 3 months or less of that period, the employer can apply for TERS COVID-19 benefits on behalf of its employees. Let's look at the first one, pay as you earn, what is available. So the first thing, qualifying taxpayers include tax compliant small to medium-sized businesses who may qualify for. So for you to qualify for this deferral, number 1, you should be tax compliant. Now SARS offers, if you realize that if you are in possession of a tax clearance certificate, and then maybe you got it last year sometime, just know that although it might be valid, SARS now uses the live PINs, which means that since your receipt of the tax clearance certificate, that's why they don't produce them anymore, and they rely now on the PIN, which is live. because at the end of the day, if you just keep one submission, you are no more compliant again. So just always be aware of that, that now SARS looks at the live time to measure your compliancy on a month-to-month basis. So the available relief on pay-as-you-earn is that there'll be a deferral of 20% of the payee liability without imposing any administrative penalties and interest for late payment thereof. Now, the reason I've put the other ones in red is that those were the measures that came into effect on the 1st of April, and now it's been changed with the second wave. They've increased the amount of the percentage of deferral. By deferral, we mean that you can postpone the liability or the portion thereof to a later date, which will be indicated below. And then this deferral will be only applicable for the period from 1 April to the end of, I think, 31st of July. That's when the deferral is available. And then the turnover should not exceed 50 million, but it has been proposed now that they're looking at enterprises with a turnover of 100 million or less. Should there be any enterprises who earn over 100 million, they can request for these deferrals in writing, and SARS will look at this on a case-by-case measure. So these deferrals have to be paid from September in 6 equal installments. So if we look at a brief example of what this actually means, is that let's assume that from 1 April to the end of July, you've been declaring liabilities as indicated on this presentation. Remember your payroll liability, I need to just emphasize this, needs to be calculated and inserted on your VAT 201 as it exists. If you have a liability of pay-as-you-earn of 150,000, assuming you'll also have skills development levy and UIF, all those individual liabilities should be inserted on your VAT 201, and then you should do the submission based on the full amount. Although internally for your company, you can deduct the deferral. This example shows 20%. Obviously, now you will look at 35% of the deferral each and every month. That is money that you should set aside, knowing that you need to repay back to SARS in 6 equal installments. How this works is that although the deferral is available, for you to know how much deferral you have to get, you have to actually submit the return as it is. And then after submitting it, you can download your statement of account. The statement of account will clearly indicate your available deferral balance that you can defer. And it will also show, it's something I was going to discuss later, the skills development levy. In the second wave, we have been given a holiday on the SDL. But remember, this holiday only applies from the 1st of May, which means that it may not apply for those who will be submitting now, which is due by the 7th of each month. So for April, there'll be no holiday on the skills development levy because it only comes into effect in May. So your declaration for May will be made before the 7th of June. That's when you should always run your statement of account to just view what would be the percentage of your deferral. Yes, you will have the option to say if you are able to pay the full liability, you pay it as it is. Because remember, although this is only a temporary relief, it's a cash flow benefit for those 4 months in place, but you still have to pay it back at the end of the day. So it just assists you with cash flow during the times that you are not able to produce revenue. But if you have the means, you can pay it in full to avoid any unnecessary burdens later. So the benefit, looking at this one on the 20% deferral, you could have saved yourself 120,000 Rand in 4 months, which is a cash flow benefit. And then it just shows you the payroll amount. So when you do have to pay this amount back again you'll have to pay it from the 7th of September, whatever the total liability is of the amount of deferrals you have. You'll have to divide that by 6 and pay it as an additional payment by the 7th of each month as you submit in your payroll. Before I move away from the payroll thing, is that we need to note that if, however, you do not pay, let's assume you submit by the 6th next month and then you want to defer any of these, but should you not pay the 80%, which now is the 65% liability, this falls away. This benefit falls away and you automatically incur penalties. So for you to qualify for any of these reliefs, you have to, number one, submit in time and pay the required amount in time. Otherwise, everything else falls back and then the relief goes away, you incur penalties. Next slide. We look at the ETI. As explained, the payroll employment tax incentives aims at encouraging employers to employ the younger generations, people from disadvantaged areas, create more employment. And then for now, the criteria was that you can claim for 24 months if someone is getting paid a minimum wage of at least 2,000 Rand and a maximum of 6.5. You could claim up to 1,000 Rand, which is, someone once asked me that, why is this not beneficial to the employee? In a way, this is beneficial to the company because they assist in the company in keeping us employees employed. So this relief makes it easier for the company to keep the employees employed. So in normal circumstances, we could claim this at 1,000 Rand. But from the 1st of April, we could claim an additional 500 Rand, which made it go to 1,500. So it says increase the maximum amount of ETI claimable during this 12-month period for employees eligible under the current ETI Act from 1,000 to 1,500 in the first qualifying 12 months, or from 500 to 1,000 in the second qualifying month. But now the adjustment has been made for the next 4 months from 500 to 750 per month. So the qualifying criteria is that employees who are aged between 18 years and 29 years, obviously you can't hire someone below the age of 18, who no longer qualify for ETI because the employer has already claimed ETI for the past 24 months. Normally, when you hire that someone, you are allowed to claim ETI for 24 months. But if the 24 months has lapsed and you are now allowed to claim it again due to this COVID-19 claim. And then for those who are not eligible due to their age, it's now allowable for you to claim for them who are aged between 30 and 65. And B, they should be below the minimum pay. That means 6,000 6,500 or less, but earning higher than 2,000, obviously. So the reimbursement will only happen if the ETI exceeds your monthly payee, which means that your monthly payee be due to the fact that maybe have a smaller workforce, the ETI be more than the payee, SARS will refund you. But if not, in normal instances, you deduct it from your payee expense as you are preparing your form. Most software payroll services like your Pastel payroll, your Simple Pay will already have this calculated for you and will make your task much easier. And yet again, a big emphasis is that all these relief measures will only be in place once you have submitted your return in time and paid the minimum requirement as indicated by your available relief percentages. Looking at the third measure, the temporary relief employee scheme, this scheme, although from the UIF, is something that is separate from your normal UIF. Just a brief description, UIF, which is payable to employees if they are retrenched or if they are dismissed. The employee himself would get a UI-19 form, fill it in, and submit it to SARS manually, or they can claim for it on U-filing on their own. That is for unemployment insurance. And currently, those can be claimed for, I think, 8 months, if I'm not mistaken. So the TRS, which is a temporary employee relief scheme, is separate from your normal UIF. It doesn't look at whether you were a contributor to UIF or not. And then, like it said, it's separate from the benefit scheme. It doesn't look at your credits. Sorry, you have to be a contributor, but it doesn't look at your credits if you have UIF credits. And then you have to be registered for UIF by the 1st of March. So if there's anyone who's trying to register now, able to access this, unfortunately, you will not qualify. So it says it applies where the company has closed its operation as a direct result of COVID-19. Claims are not dependent on an employee having any UIF credits and will be entitled to the benefits irrespective of how long they have contributed. The company, rather the employee, submits a claim for UIF, and the company then pays over the money to the employees. There's an online process available. You can send a blank email to covid19trs@labour.gov.za. You will get an automatic reply with forms that you need to fill in, as well as the MOA, which needs to be signed by the employer if you've got more than 10 staff. You also have the option to apply for the TR's benefit directly online on the U-filing website. You can just submit everything online there. There's another option to do that. Of course, those who are having challenges in doing this, Enterprseroom is available and can assist with applying for this on your behalf, although it's another service that includes an additional cost. Here it just tells you how the benefit will be calculated in terms of the income replacement rate sliding scale. The scale of 38% for higher earners and up to 60% for lower earners. So this means that if you earn more than 17,712, anybody earning above that, it will be capped at 38%, which means that you will receive not more than 6,730 a month. Of course, you can't earn for this if you are being paid your full salary. You can apply for those employees who do not earn a salary at all or who earn less than what they used to earn. When applying for this, obviously you will have to declare what was their salary before the changes in the current month in their salary. You will have to attach proof of payroll for the last 3 months. And then here it says the company must open a dedicated UIF bank account or clear its existing account so that COVID-19 benefits can be tracked. But what we've also realized is that you do have an option to have this paid directly to the bank accounts of the employees by inserting the individual bank numbers. This also helps you as an employer, because if you submit a claim and then they pay directly into the company's bank account, it will just be paid as a lump sum, and you would not know how it was calculated and how much should each employee get based on the money being paid. How was the calculation done? So it's rather you use the separate bank accounts, because there will be an audit of this money once it comes through your business. Once it comes in, it should be paid out within 1 day, by the next day, and within 7 days, you will have an audit regarding that. Looking at the second wave of the tax measures, skills development levy holiday. From 1 May 2020, there will be a 4-month holiday for skills development levy contributions. We know that each and every business that its annual salaries are more than 500,000 per annum is supposed to contribute 1% of the monthly wages and salaries needs to go to SDL. So what this is a direct cash flow relief benefit. The holiday entails that there is no obligation to pay, and you will not be required to pay it after the 4 months. So this is the cash flow relief. And as I've mentioned, since it's from the 1st of May, this will only be applicable when you submit your VAT 201 from June onwards, before the 7th of June. So don't be surprised. The SDL for April still has to be payable before the 7th of May. We look at our next slide. Although these might not be relevant to most of you, it's just a summary of the measures that were made, the second wave of measures that were made available, the 3-month deferral for filing, and the first payment of carbon tax liabilities. We all know that companies were included in air pollution and all those things. This was put into effect in June 2019. The first payment was due on the 31st of July 2020. But at least there's a 3-month deferral regarding that for their first payment. So it's only going to be payable by the 31st of October 2020. Second one, a deferral for the payment of excise taxes on alcohol, beverages, and tobacco products. This one, I don't think any of our SMMEs pay interest in these, but there would be also a deferral in payment. Deferral meaning that any taxes that had to be done will be paid on a later date. These were due in May and June, so it has been deferred for 90 days. Postponing the implementation of some budget 2020 measures. So what this means is that the budget for this year was that the 2020 budget announced measures to broaden the corporate income tax base by restricting the net interest deductions to 30% of earnings. So they're going to restrict any interest that we earn, and then for assessed losses that are being carried forward to taxable income, they're going to only limit 80% of that. But I think this won't happen this year since we are having this disaster. This will only commence on or after 1 January 2020. And then, as I have indicated, there'll be a case-by-case application to SARS for waiving of penalties. If you earn more than 100 million rand and you feel that you were not included, you can apply directly to SARS, and then it will view each case based on merits, whether they'll give you that deferral or not, although you are over the 100 million rand income bracket. Increasing the deduction available for donations to the Solidarity Fund. So now, normally, whoever does a bona fide donation to a public benefit organization would be required to have a donation certificate, and they could deduct up to 10% of that. So now they've increased that by an additional 10% if you donate to the Solidarity Fund. So the company can deduct that, as well as adjusting pay as you earn for the donation made by employees. So if there's any employees that made deductions, we can adjust it on a month-by-month basis on the IRP5 or salaries monthly, and we can deduct that donation up to 5% on the employee's monthly salary, or an additional percentage can be factored up to 33 1/3, depending on the circumstances. Expanding the access to living annuities, individuals who receive funds from living annuities will temporarily be allowed either increase up to a maximum of 20% of 13.5% or decrease down the minimum. So this also offers people who are reinvesting their pension investments, and they need access to cash flow. So there's quite some of relief regarding that. I believe we've reached to the end of our presentation on the available release tax measures. And then I know some people might have questions mainly regarding the UIF part of it, the payee deferrals. So if we look at the frequently asked questions, number one, what information do employees need to register for UIF? And says, you as an employer will register all employees for the benefit, and thus far no forms or information your employees will need other than what they should expect after you have registered for them. Who has to apply for the COVID-19 relief benefit? Employers who are unable to pay salaries to their employees during the 21-day lockdown. Obviously, I need to emphasize on that although the lockdown has been extended, the system wasn't updated to end of April, as and when we prepared this presentation. And then one other thing is that the benefit was valid up to the end of April during the lockdown. So which means that when the lockdown is lifted, you can no more apply for the temporary employee relief scheme.
Jeffrey, can you please repeat this again?
Sorry. So what I was saying is that for the COVID-19 relief benefit, it is only available and as long as the lockdown is in place. Once the lockdown is lifted, you can no longer apply for the TERS, Temporary Employee Relief Scheme benefit. So which means that looking at now that from the 1st of May, we are going into level 4, I will just consult with my colleague Neil to just find out, because no information has been made available to us. I check on the available sites whether this means that the lockdown is lifted or not. But we will come back with more information to that and what happens if people can still continue applying. But my advice is that to those employers who have not yet applied, please do so before month end, and then as soon as information is available from the first, whether the benefit is still available, we'll make that known to all of you. How do I apply? I've communicated this. You can send an email to covid19trs@labour.gov.za, or alternatively apply on the U-filing website. What is the deadline for the submission of the application? COVID-19 benefit for 21 days lockdown period. No applications will be entertained once the lockdown is lifted. I already touched on that. Do employers who are not registered for UIF qualify for the relief benefit? No, an employer needs to be registered for UIF to qualify for this benefit. Companies who registered after the 15th of March 2020 may not be eligible for this benefit. That's why I'm saying if you register after the 15th of March, you do not qualify. Do informal businesses like spaza shops, hair salons, etc. qualify? This means that as long as you do not have a CC registered and you operate as a sole trader, no. Informal businesses won't qualify for this benefit. Instead, they must check with the Department of Small Businesses for the support they offer. There are other available support or relief measures as highlighted by my colleague last week regarding the spaza shops. Should you require more of that information, feel free to pop a question regarding that and then we'll email it to you.
Hi, Jeffrey. I've got a question.
Yes.
That's actually more of a comment. I was asking that, okay, if a company has registered for UIF after the 15th of March, let's say they continue paying their employees and then further down the line, let's say the lockdown is lifted and maybe sometime around July, because the business has been struggling, they can no longer pay the employees. The employees can still apply for normal UIF. Is that correct?
Yes, that is correct, provided that they have a credit and they have been contributing. Remember, the UIF and the TERS benefit differs that with TERS benefit, you don't need to have a credit. As long as it's being paid, they don't just charge you on your credit. But for UIF, for you to claim the benefit, you need to have a credit that you are paying. So as long as the employer is contributing, you will qualify for UIF.
Okay, thanks.
Is there any other questions, or may I continue with the frequently asked questions? And then we'll look at any other questions. If I continue, as a domestic worker, can my employer apply for the COVID-19 benefit? Yes, your employer can apply for the COVID-19 benefit, provided they have been contributing to UIF. So which is important that there's a flip side to it. As happy as you may seem for your domestic worker, have you been contributing or have you registered her for UIF? Do people who work for commissions or freelancers qualify for this benefit? No. Freelancers and commission workers do not qualify as they are not covered under the unemployment insurance amendments. That means that the company does not pay UIF for them. And I don't think they themselves have registered for UIF. How long does it take to process the application? 10 days. I've got people who told me they've got it in less than 10 days. And then one issue of concern that I need to highlight with employers, it's been raised in the media lately that there are employers, while applying for this, they are tampering with the salaries, under claiming the understating the salaries that they are paying to employees and overstating the benefits that they want from the UIF. Some of them has not been contributing, and they are looking at claiming at these. So whatever you do, you will be found out if you are not contributing or you are submitting incorrect information or overstating your salaries that you were paying your employees. Obviously, they will find this out one way or another. How much will I be paid? I discussed on that. The maximum that you can get is based on a salary of 17,000 Rand. And the UIF will take into consideration the current salary of the employee to determine the income replacement rate. And then the date for our next webinar will be advised soon. And then in the meantime, should you require any other services, please see the services that are offered by Enterprseroom, from compliance, CIPC registrations, shareholder agreements, tax clearance certificates. So which means that all entities that are not compliant right now, we can take you up to that point of being compliant, and on preparations of financial statements for you to submit your income tax returns. You'll obviously need management accounts or annual financial statements. We can clean up all your historical information and help you with any other budget and cash flow projections as required by other COVID-19 relief funds. I'm open to taking any questions. For you to take or ask a question, please unmute yourself, and then you can ask a question, and then you can mute yourself thereafter.
How many hours must someone work per week before you have to register them for UIF legally?
I'm not sure of that. I'm going to just double check with Neil before registering a person with UIF, but I'll come back with you regarding that. I don't know if Neil is aware of that.
Yeah, if I can respond to that question. You are legally required to register and deduct UIF the moment somebody becomes an employee, as defined in terms of the Unemployment Insurance Fund Act.
Sorry, if you don't mind, what is that definition?
Okay, so there are different definitions and there are variations, but the definition relates to somebody that receives a monthly salary, and that you then have to deduct 1% off their salary, and the employer pays 1%. So it is anybody that is employed on a fixed term or full-time basis with a particular company. So it will not relate to fixed-term contractors. It will not relate to people who operate as independent contractors, because they bill for their time to a specific company.
Okay. Okay, thank you.
Any other question? And I think my colleague Neil is busy taking the other questions for those that have put it on the comment side.
Hello, Jeff. Hello, Jeff.
Hi, I'm here. I think
Hi,
there's
we can
someone
hear you. Can
speaking
you
there.
please cut your background? There's a TV playing.
Offense Morake.
Hello, Jeff.
Sorry about that.
Hi, Jeff.
Sorry,
I'm
Jeffrey.
available now.
I had to mute Offense because his background has TV and it's making a lot of noise. We couldn't hear him. Offense, can I unmute you? Have you switched off your TV?
Yes, it's off.
Thank you.
Yes, you may
Yes,
continue.
I just want to find out. Yeah, I just want to find out. So currently now, let's say if my employees are not registered on UIF, so it's not going to make any sense for me to register them now and then apply for this COVID-19 or whatever. So because now it means I won't have any contributions that I would have done to UIF, right?
Yes, you are correct. So
Okay.
registering your employees now, although you have to register them by law to be a caring employer, you can do that now, although you won't benefit from this.
Oh, okay. Thanks.
Thank you. Any other question? So just for those who will be applying, I'm just emphasizing that when you do submit your EMP 201, please make sure that you do it in time and then you pay it as per you defer what needs to be deferred. You check your statement of account before you actually make the payment to SARS. So just because this can affect the entire process and your compliance process, and you can incur unnecessary penalties in these tough times. You don't want to do that. So I implore you to make sure that you double check everything before you submit and do it in time.
Okay. Jeff.
Yes.
Yes. Just a quick one. I just want to find out, are you going to be able to send us this presentation or this slides that you've been presenting? Because I think I missed out on the first 30 minutes according to Connect.
Yes, the slides will be made available. I have requested if you click on the little chat box there, you can just send in your email address, type your email address, and then we will, or even if you remember something, you can just send an email. I'll just put the last part of the slide there. You can send an email to the following address.
Okay, I'll do that.
There you go.
All right, thank you.
For everyone on the call, please make sure that you leave us your email so that you can get the recording and you can listen to it later and also receive the presentation. Thanks.
If there's nothing more, I would love to thank everyone for tuning in. I thank you for your patience, and wherever was not clear or you did not understand, like my colleague said, this webinar will be made available to you. The slides will be there, and then should you remember or have any further questions, feel free to email us. Should you require any further assistance, feel free also to email us requesting the type of assistance you require. Thank you very much, fellow colleagues, fellow SMMEs, business owners, and may you stay safe, keep safe. Thanks one again. Nolu?
Thanks, everyone. If you could please leave me your email in the chat box, I will forward you the full presentation plus the recording. Thank you and have a great day.